What is good, everyone? So in today's video, I'm going to be breaking down how to combine liquidity grabs with top-down analysis, which is an absolute must in order to become profitable. You have to understand how to read the markets from top to bottom, top to down, like top-down analysis, right? But it is not just top-down analysis. You also have to understand how to gather the information from each and every time frame, because every single time frame tells a certain story, and every single time frame has its own story behind that, right? So I'll get into all of this within this video. Don't worry, just watch the entire video. But anyways, I'm going to be going over the 1 hour, then 30-minute time. This is all the same price action, by the way, exact same price action, right? But there's different layers to this by understanding each time frame top-down analysis, right? I'll get into all of this. I'll also get into a trade recap where I made over $6,000 in about 4 minutes trading top-down analysis combined with liquidity grabs. So don't worry, everything will be covered in this video. And this is basically the video you'll ever need, like the only video you'll ever need about top-down analysis. So I hope you enjoy, take some notes, and watch the entire video, and let's get into it. All right, so a thumb of rule here is that we use the higher time frames for direction and bias. So that means the weekly, daily, 4 hour and 1 hour for direction and bias, and looking at the higher time frame overall trend, right? Then we use the 30-minute, 15, 5, and 1 minute to identify the best possible entries and exits and risk management during the trade. But I'll get into this as well, don't worry. So right here, we've got a 1 hour time frame price action, 3 1 hour candles. That's obviously 6 30-minute candles, 12 15-minute candles, and 36 5-minute candles. I'll go over this, don't worry. But anyways, here's basically just 3 bearish candles. It is pretty straightforward, right? A bearish candle, another bearish candle, but this is kind of not that strong, so it's most likely moving sideways on the lower time frame. Then there's a liquidity grab breaking previous high right here, then the continuation. And if we go to the 30-minute, it's the exact same thing. 2 30-minute candles right here. That's the 1 hour, close down here, exact same price action. As I said, all of these time frames are the exact same play, just different time frames, right? But anyways, if you're not familiar with the CCL, there's only 3 phases in trading, okay? The market can only be in one of these 3 phases, and then it repeats itself. It is a repeatable process, and when something is repeatable, you can take advantage of it and make a shit ton of money with it. Now, as I said, there's only 3 phases to the market. There's the continuation. I'll draw it out right here, continuation. Then there is the consolidation. Then there is the liquidity, so CCL, and then it repeats itself. CCL, 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 right? Just repeats itself basically. So CCL, continuation, consolidation, liquidity. And then after the liquidity, we get the continuation again, right? That's just the 3 phases. Like, the market can only be in this no matter which time frame, no matter which session, no matter which pair, no matter which instrument. Everything is CCL, right? Now, the first C is obviously the main push, the overall higher time frame. Then the second C, consolidation, is whenever price is moving sideways, generating buy side and sell side liquidity. Then we get that liquidity grab, breaking, most likely following the higher time frame trend. So in this case, breaking buy side liquidity right here, grabbing buy side liquidity, then we get that continuation post liquidity grab. Now, if you're trading ICT, you may be familiar with this because he calls it distribution, accumulation, manipulation, then distribution. But I just simplified way more than that. It's the exact same thing. Okay, I'm not here to copy anything, and he didn't copy it. Like, it's not his thing. Like, it's not his whatever, right? That's just how the market moves. Everyone should know this. And by knowing this, by knowing that it's repeatable, you can make a lot of money and become profitable. Now, as I said, 30-minute time frame, we get that first initial push right here. Then price starts retrace with this bullish candle right here. So this is basically moving sideways. Whenever price is moving sideways, as I said, it is generating buy side up here and sell side down here because there are resting stop losses. Stop losses equals liquidity. Liquidity equals money. What does price want to do? What does market want to do? It wants to hunt the money above or below previous highs and lows, or equal highs and equal lows, right? So it pushes up at market open, typically happens at market open or pre-market open, liquidates buy side liquidity, and then we get that move. Now, this is the 30-minute time frame, and this is the 1 hour time frame. Look at this. Broke previous 1 hour high right here, right? Broke the two previous 1 hour highs right here. Exact same price action. Now, if we zoom down to the 15-minute, you have to understand that these candles and this candle right here is literally just a consolidation, aka accumulation, or like a sideways moving thing, right? It's just a consolidation phase. Whenever price is moving sideways, it's generating buy side and sell side liquidity. Sell side liquidity down here, buy side liquidity. Liquidity equals stop losses equals money, right? Remember that. Now, at market open, this is not one candle because this 30-minute candle is obviously one candle. But on the 15, a wick on the high time frame is just a candle closure on the lower time frame. So a wick on the 30-minute time frame is 2 candles on the 15-minute time frames. Funny enough, right? But on the 15, it's not just a wick. It's not just this wick. It is 2 candles, a bullish candle with a rejection here, and then a bearish candle after that closing down here. aka closing down here. Now, if we zoom down to the 5-minute, right, this is where we want to get our entries. Now, if we go to the 5-minute, as I said, it's the exact same price action, all of these time frames. This is basically the push, consolidation, right here, liquidity, and then push again. So CCL, right? I can even draw it out here to explain further. C, right? Then the next C, consolidation, and then we get that liquidity, right? On the 5-minute, it is also just closures, because at the higher time frames, it's wicks, but on the lower time frames, it's closures. And after that liquidity, we repeat itself. So continuation again, continuation, consolidation, liquidity, continuation, consolidation, liquidity. That's how you want to take advantage of it, right? So above, you have to understand that there's two forms of liquidity as well. There's liquidity above or below previous highs and lows, and there's liquidity above or below equal highs and equal lows. In this case, on the 1 hour time frame, it is above a previous high up here. There's buy side liquidity up here. But on the 30-minute time frames, it's equal highs, right? On the 15-minute time frame, it's also equal highs. Look at all these highs. It's at the exact same level right there, equal highs. On the 5-minute time frame, there's also equal highs here. Then price at market open pushes up, liquidates that, manipulates, stop hunt, whatever you want to call it, and then we get that move to continue down. And you may ask, why does price want to manipulate or liquidate early sellers, right? Obviously, because everyone basically got in right here, stop loss up here, take profit down here, because this looks like a break and retest, right? A break, oh wait, that was my mistake, break, retrace to this level, rejection, everyone gets in sells right here, the market traps everyone has their stops up here, aka that's where the most liquidity is. Liquidity equals stop losses equal money. Is price going to shoot down here? Most likely not. It'll most likely shoot up first, liquidate everyone, and then shoot down, right? Happens on every single time frame, every single pair, and every single session. Now, it's most likely going to happen in a more volatile session, obviously, because the more volume there is, the more liquidity there is, right? That obviously makes sense. But if we go to the 15-minute, everyone most likely has their positions right there, stop loss up here, and take profit down here. Is the market going to shoot down? No, it's going to shoot up first, manipulate them, and then it's going to shoot down. And that is what we want to take advantage of. So instead of entering right here and getting stopped out, we enter post liquidity grab, and then we take advantage of that continuation post liquidity, right? I hope that makes sense. So instead of entering here on the lower time frames, this is the exact same entry on 30-minute, 15-minute right here, and then the 5-minute right here, right? Instead of entering here with the stops up here, then you get liquidated. We take advantage of that move post liquidity grab. So we enter right there with the stops above the liquidity grab, because if the stops were to get broken, the trade is no longer valid. The stops are placed at a logical levels, because if price wants to break that, you know, it's most likely not continuing down anyways. And then we take profit at a significant level, or at equal lows or equal highs, or below or above previous highs and previous lows. That is how you want to take advantage of top-down analysis. Let's go over a trade recap where I did this, because I do this every single day, and I've done this for 2 to 3 years now. And yeah, where I made over $6,000 in 4 minutes trading this exact top-down analysis combined with liquidity. So I hope you hang on here. I hope this is starting to make sense. But trust me, it will eventually. Let's get into the trade recap. I'll see you guys over there. All right, so here's the trade. This is basically taking off the 5-minute time frame, right? But we use the daily, 4-hour, and 1 hour for direction and bias, and basically also the weekly. But I could already see on the weekly that it was bearish because of daily, right? And then we use the 30-minute, 15-minute, 5-minute, and 1 minute for entries, right? This was a beautiful textbook A+ setup. Now, this trade looks pretty familiar with the price action we just saw, because I got inspiration to do that video, because I've got a lot of requests on how to do top-down analysis, how to combine liquidity grabs with that, with the higher time frame, etc. So let's go over this trade real quick here. Let's delete this level. Now, let's actually go to the daily time frame, right? The annoying thing about TradingView is that it can't really pause its time, so this ended up pushing up, but just forget that, right? But anyways, this is a overall bearish trend. You can look here. We can even go back a few bars here. Overall bearish trend, pretty easy to see. If we go to daily, it's also bearish. If we forget the daily candle right here, if we go back a bit, 1 bar right here, it's bearish, right? The overall trend is bearish. Hence, I'm taking sells, because it's more likely to go down than up if you're in a pro trend versus counter trend. If you go to the 1 hour as well, bearish trend. It's pretty easy, right? Now, if we go to the 30-minute, let's actually skip ahead here. This is the annoying thing about TradingView replay bar, but it's fine. It's fine. If we go here, right? This is a let's go to the 30-minute right here. This is a overall bearish trend. This right here is the continuation, as you can see. Continuation bearish. Now, this is the consolidation right here, where price is moving sideways. Whenever price is moving sideways, it's generating buy side and sell side liquidity, aka stop losses, aka money. Now, at market open, this was taken at 9:45, so yeah, 15 minutes after market open. And at market open, is price just gonna shoot down? Most likely not. It's most likely gonna push up, liquidate this, manipulate that, and then push down, right? But I'll get into that here in a second here. So if you go to the 30-minute, now, do you see how I use the daily, 4-hour, and 1 hour for direction? Bearish, right? Now let's delete all these levels as well. Let's just delete everything. Now I go to the 30-minute to identify my significant levels. There's obviously a level right here. Look at all these rejections. There's a level up here. Look at all these rejections up here. There's a level down here. Look, this rejection. And there's a level, let's go to the left here. Let's zoom out. There's a level down here, right? There's also, you can kind of say, equal lows down here, which is what I'm targeting, right? So that's my potential take profit if price were to push up here and then flip bearish, right? Now, this is, let's see here, this is market open actually, 9:30, like this is the 9 a.m. to 9:30 candle, right? So market opens right now, and I'm anticipating that price wants to do something like this. If I were to draw it out as well, push up and liquidate this buy side, because there is buy side liquidity resting above these stop losses, or these wicks up here, right? Because liquidity equals stop losses equals money, because most traders has most likely gotten into sell positions right there after this rejection, because it's an overall bearish trend, right? But their stops are up here. There's equal highs up here. There's two forms of liquidity, above or below equal highs or lows, or above or below previous highs and previous lows. They're pretty much anticipating this move right here. Well, what happens? We're on the 5-minute time frame right now. Market opens, shoot directly up. That's like 100 pips already within these first 5 minutes. Then the next 5-minute candle pushes all the way up here, liquidates everyone. So all the early sellers got liquidated, and now we want to step in, right? When everyone has gotten out, we want to enter. That's basically how you want to see it, because 99% of traders are unprofitable. So just do, or just don't do what 99% of traders are doing, but do what the top 1% is doing. They are waiting for the 99% of traders to get stopped out and then entering, right? So now the entry is taking right here on the 5-minute time frame. You could also zoom down to the 1 hour. You can see a clear break of structure, push up, bearish candle, break of structure down here. Clear textbook play, right? Stops up here, right? And then we target sell side liquidity down here at these equal lows, which are marked out to the left of us, right? It is a textbook play, but do you see how the 15 just closed right here? No, the 15 is still open, my bad. The 5 just closed. The 30 is still open. The 1 hour is still open, and I'm anticipating we will get a bearish flip to continue down, right? The 15 is still open at this point. Remember that, right? So what happens? Well, price just instantly shoots down, take profit hit, and that's basically, if we go to the 5-minute, this is the annoying thing about trading view. I mean, it can't pause time. It's just, yeah, but whatever. You kind of get the idea. We just shoot straight down, right? And by the way, this is not just some hindsight trade. I've got proof of everything, proof of live account, proof of withdrawals, proof of bank statements, and I trade live every single day as well. Don't worry, I didn't just go back and replay bar just to show you guys this. But this is what I mean about top-down analysis and how to use the daily, 4-hour, 1 hour for direction and bias, and also weekly, and then the 30-minute, 50-minute, 5-minute to identify the buy side and sell side liquidity, and then take advantage of that liquidity grab post, or I mean, take advantage of that continuation post liquidity grab, and that's basically what we did. Textbook play. I make quite good money off this, and that's basically what got me profitable. And if you want, follow along, you can always do that. I've also got a 16-page PDF file here going over it. Just download it for free. It's in my Discord. You can just download it and use it and take advantage of it for free. There's basically the entire strategy on paper. And yeah, if you like the video, let me know, and I'll do more of them. And yeah, cheers, boys. Take care. I'll see you guys in the next video.